Right. Assalamualaikum warahmatullahi wabarakatuh. Okay. I would like to share an explanation another past year, which is on December 2019. This one I want to focus on question number two, which is the PPE. Your exam later. The comment is like this actually. Question number two, PPE combined with a few chapter, which is government grant, borrowing costs, and investment property. Don't forget, under PPE also, you need to know non-current asset, held for sales, and foreign exchange. Right, these two also you need to know. Okay, so just proceed with this first. Okay, so first thing first, we go through the question. Okay, so in this question, maximum Berhad is a company manufacturing computer chip for local market. Has a factory in Alor Gajah due to rapid demand. In company chip, Maximum decide to construct a new factory located in Peguh Industrial Park, Melaka, and the construction was commenced on 1st of June 2013. Okay, the construction started 1st of June 2013 in order to partly finance the construction. Partly finance, so they took 5 years loan. So in other words, actually, they did not just based on this loan. They have their own money. Just how a part of it use loan, right? So 5 million, 5 years. All right. Effective interest rate is 7% on 1st of January 2014. Okay, you can see the date here. 1st of June 2013, the construction start. 1st of June 2014, the loan is taken. Remember, we can just consider this as borrowing cost under MFRS 123 when both construction start, loan is taken. So both. So in this question, both start on 1st of January 2014. All right. So we just proceed first. However, due to the shortage of worker and raw material. It will stop on 1st of February 2015 and resume back on 1st of June 2015. So you see February, March, April, May. So 4 months is stopped. 4 months is stopped. June, 1st June, not count lah. So since the construction was suspended, Maximum temporarily invest 1 million in 4 month fixed deposit and earn 5% of interest. You see, they stop for 4 months. They invest for this 4 months, they invest. So investment income during this stop period, no need to minus because stop, right? Stop. You cannot capitalize. Therefore, you no need to minus any income during the not capitalized period. All right. So the construction was completed on 30th of November 2016 at a total cost of 12.5 million, including unused cement and rectification costs of 100,000 and 50,000 respectively. Maximum Berhad immediately use the factory once the construction is complete. All right, never mind. The second situation, second paragraph. On 1st of July 2015, Maximum decide to buy a new machine. You see, this one is a different situation. Okay, different situation independent from the first paragraph. Buy a new machine at the cost of 1,750,000 to increase the production. So secure a government grant 950,000. So buy this machine, have receive a government grant 950,000 at the date of acquisition of the new machine. Installation cost is 20,000 and 40,000 transportation cost. Um, it is the policy of Maximum to account this government grant under deferred income method. Remember, government grant have two methods: write-off against asset method and deferred income method. So this company decide to follow a deferred income method. So the useful life of this machine was 10 years. Okay, PPE will depreciate it monthly based on trade line basis. All right, so the other situation, 1st of January 2017, Maximum Berhad able to locate a potential buyer to buy a factory in Alor Gajah. So Maximum committed to sales. You see the word? Committed to the sales factory and make necessary arrangement to support this. Okay, this one is independent situation again compared to the last two paragraph. Carrying amount for the factory at the end of the day was 5 million. Okay, with the remaining useful life of 15 years, the fair value of the factory is 4.4 million. Related legal fees is 150,000. Legal fees here is cost to sale. Fair value less cost to sale. Fair value is the fair value 4.4 million. Cost to sales is 150,000. All right. So this one is different situation or different MFRS to cater. Next, on 1st of July 2018, Maximum decide to rent out one of its building. You see, another situation. So in this one question that you have four situation. All right. In other words, four MFRs to cover. So located at Simpang 4 Malacca, the office building was bought on 2.5 million on 1st of July 2016, has a useful life 10 years. The fair value of the building on 1st of July 2018 was 2.8 million. Okay, so now the question give you fair value. All right. So again, this one is different situation. I colored this with the different color to just separate each MMRS, right? So we first go to the first question, right? So in the first question, yeah, okay. So the company use a cost model, all right. So the year end is 30th June every year. Okay. So the first question here, list the amount of cost that should be included as part of initial cost of the new factory in Pergo. Malacca upon completion. List the amount of cost. Okay, list the amount of cost. In other words, the question asks you to calculate, right? Initial cost, right? List amount of cost, right? So, before proceed with the answer, I would like to show you the timeline, lah. Alright. So basically, the loan start on 1st of January 2014. You can see here. Okay, you can see here the loan start. Okay, the construction start is on 1st of June. I did not put this date line because 1st of June is here, right? So 1st of June is here. So the loan start on 1st of January 2014. So mean that at this date, we have a loan, the construction is start. So both. So we can start capitalize the borrowing cost line. And the loan start on 1st of January 2014, right? So it is going to complete on 30th of November 2016. Based on this question, it's going to be complete. All right, so it's going to be complete on 30th of June 2016. All right, so from this period, I put a timeline here. So year end is 30th June every year, right? So 1st of January, 30th June is 30th June 2014, 2015, 2016, and 2017. The last one is 2017, right? Okay, 2017, the last one. All right. So here we have 1, 2, 3, 4 year end. We have 1, 2, 3, 4 year end. Okay, so we see now how much the borrowing cost that we can capitalize. All right. So first thing first, it is highlighted that on 1st of February until 1st of June, the stock, right? 1st of February until 1st of June, they stop the construction. So during the stoppage period there, we cannot capitalize any borrowing cost. During this period also, there is an investment income. So investment income also no need to do anything lah, because investment income we just put inside the statement of profit or loss as income. No need to minus with borrowing cost, yeah. So from this period, we need to stop recognize the borrowing costs until the building is complete, right? Until the construction is complete, right? So construction is complete on 30th of November 2016. All right. Therefore, the first year end, 30th of June 2014, it is only for 6 months. The next year end, it is only for 8 months. Why 8 months? Because 4 months is stock. So 12 months less with 4 is 8 months. So 2016, okay, investment income need to minus because no need to minus, highlighted here. No need to minus, because incurred during the suspension period. All right. So year end 30th June 2016, yes, 12 months, nothing happened here. And until it is complete, it is only 5 months lah, because November is complete. So July, November, July, August, October, November, December. So 5 months, So 5 months until it is complete. So after we get this month, after we know this month, then we can calculate the borrowing cost. All right. So borrowing cost to capitalize at the 30th of June 2014, the first year end here is for 6 months. All right. As we calculate here, it's for 6 months. So it is 175,000. The next 2015 here is for 8 months. 8 months, again calculated, no need to minus your investment income because it is incurred during the suspension period. All right. 2016, it is for 12 months. 12 months I did not show lah. You can also show 12 over 12, or you can add 350 also. And 2017, the last one is for 5 months only. All right, so 5 months only. Okay, so we total up all the borrowing costs, we get 904,166. Total up with the construction cost. Construction cost is 12,500,000. However, we have a rectification cost and unused material, right? So we need to minus these two and we get initial cost by 13,254,166. So this is the answer for initial cost, right? So next, the question asks you to illustrate the journal entry. Okay, now is the journal entry relating to government grant. So government grant, it referred to the green color of second paragraph. All right. So in this period, okay, we see so 1,750,000. Okay, 1,750,000 plus with 20,000 plus with transportation costs of 14,000 additional cost. So it is 1,784,000. Okay. So on 1st of July 2015, we debit machinery, credit bank or accounts payable. How the company pay for this machinery, 1,784,000. Okay. And don't forget we receive a grant also 950,000. So debit bank, credit deferred income. Why deferred income? Because the company use a deferred income method. So the deferred income. At the end of the period, 1st July 2015, the end is 30th of June 2016. So 30th of June 2016, the year end. What happened? Okay. The deferred income need to realize, right? We need to realize the deferred income by 10 years. Why 10 years? Because it is useful life by 10 years. All right. So divide by 10 years, we get 95,000 per year. Therefore, debit deferred income, credit statement of profit or loss as income. This one is gain, deferred income. So 95,000. What else we need to do? We have a machinery. So of course we need to do a depreciation. So depreciation, the cost of the machinery is 1,784,000. Divided by 10 years, you get 178,400. So debit depreciation, credit accumulated depreciation, like usual. All right. Okay. So next. Right, so the next part is explain the classification of factory in Algoja Malacca for the year end 30th June 2017. Okay, now we focus on factory. Factory is here, the blue color. We focus on the blue color. Right. So in this case, actually, 1st of January 2017, they able to locate a potential buyer and committed to sales the building, necessary arrangement to support this and also done. So this one is an MFRS 5, which is non-guaranteed held for sales. So the factory building should be, you see the word here, de-recognized from MFRS 116. So it should not be MFRS 116 anymore lah. They changed the status to non-current asset held for sales based on MFRS 5. So the building satisfy both available for immediate sales and sales is highly probable. Immediate sales and sales are highly probable. So maximum berhad able to locate a potential buyer and committed to sales the factory. So non-current asset held for sale shall be presented separately from other asset in financial statement. In other words, non-current asset held for sale should be presented under current asset. Okay, under current asset because sales within 1 year, right? So D is actually related to C here. Explain the measurement of the factory in Algoja Melaka based on classification of C. Right. So therefore, non-current asset held for sales will be measured at the lower of carrying amount and fair value less cost to sales. So carrying amount on 1st of January 2017 was 5 million here, according to the question, 5 million here. Okay. The fair value less cost to sales is 4,250,000. In other words, this one is actually 4.4 million less with legal fees 150,000 here, the calculation. Right. So we have to choose the lower. You can see here the lower is fair value less cost of sales. So it will be recognized at 4,250,000. In other words, that is the fair value less cost of sales. So the difference between the carrying amount and fair value less cost of sale will be recognized as impairment loss, which is will be expense of in statement of profit or loss. Okay. Right. So we proceed to the last question. Right. So discuss the accounting treatment of the office building in Simpang 4 Melaka. You see Simpang 4 Melaka, here is Simpang 4 Melaka, the last one, the red color one, eh? Right. On 30th of June, based on relevant Malaysian financial reporting. All right. So this one is rent out. So it is investment property. All right. So there is a transfer from MFRS 116 to MFRS 140, which is investment property. So in this case, the building was classified as investment property as to meet the MFRS 140, which is used to a rental. So it will be recorded at the fair value of 2.8 million. In this case, the fair value is 2.8 million. And you can see here, any different as the date will be treated as MFRS or 16 because 16 changed to 140, right? So we need to follow 16, 116 treatment. Okay, so the fair value is treated as a revaluation. Therefore, the difference here you can see it is the carrying amount is 2 million, which is the calculation is 2 million. Less with accumulated depreciation divided by 10 times with 2 lah. You can see it is bought in 1st of July 2016. Now they want to change status in 1st of July 2018. So you can see here July and July 16 until July 18 lah, 16, 17 until 18. So it is 2 years. So that's why times with 2 years. So the fair value is 2.8 million. So we need to credit the ARR, which is the equity, the surplus, the difference lah between 2 million and 2.8 million, which is this one 800,000. Okay, thank you.